Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Monday, December 13th. It is 6:38 as I'm starting the video. And as always, run your video player a little quicker than normal, 1.25 or even 1.5x. All right, quick look at futures. A lot of green on the board, but not dramatically so. I've got equities up about 0.35%, the Qs a little bit more. I saw oil was down a little bit, Bitcoin up a little bit, copper up a little bit. So moderately risk on, but nothing crazy. Real quiet day today on macro. I don't see anything on the board, and a quiet day in earnings on the earnings front as well. So of course, then the big thing we've got this week is Jay Powell and company's announcement at 2 p.m. Wednesday with whatever they're going to do in regards to taper. We saw that on Friday we had an inflation print of 0.8 month over month. I think that was off a tenth off of what was expected, but still highest inflation since I think they were saying since 82. But the market reaction was generally positive. We had nice lifts for the most part in the indexes, led by Apple. It's been on a tear. So let's take a look at it as we head towards that big event risk on Wednesday at 2 o'clock. I'm not sure if we just kind of drift higher over the next couple days into that print. Normally you see either a suspended animation where, price just very, very narrow range for a day, day and a half into the print, or a slight drift up. That's kind of the historical norms. But you trade the market that's in front of you that day, and I don't think just sitting here saying to expect this or expect that is really the way to go, because as we've seen, the market does what it wants to do, and just looking at historical averages can lull you to sleep right before something unexpected happens. So let's dive in and take a look at it. We've had our eye on the VIX for quite a while. We were down at the bottom of the range. Then we had an explosive move up towards 35. And just as quickly, they brought it back down. We have this open gap above. And since really last week, they've driven price down. And you can see that we filled the lower gap on VIX. And so now our next area of support below is going to be around 18. But I think this is, and it's just a setup, but I'll say a perfect setup for the Powell scenario where, okay, we came down and filled this gap. Check mark 1, we went down instead of up because we had gaps both above and below price. Which one is going to fill first? We know they're both going to get filled. It's just a matter of when. But if there was some kind of wild FOMC type knee-jerk move, you could see or envision VIX, making a flash move higher, get everybody scared, fill that gap, move into 27 or 28 or even 29, and then come right back down again. We do, just looking ahead from now until the end of the year, which is not that far away, of course, we've got good seasonality behind us. So there could be, we're still holding out hope for a run into the end of the year higher, but that may come after a little panic move out of the Fed. If they come out and say, oh, we're doubling our taper, effective today, or whatever they may say. this time around, because I think the muzzle is now off of Powell. Why? Because he got renominated. He's going to be reconfirmed, so he's got job security. And now I think as part of that process, I think he's been given a directive to fix inflation. We'll see how all that goes, but I think he's got room now to be more hawkish than he's been really since he's been Fed governor. So I wanted to give a brief look at breadth. We have looked at this chart in the past. This percent of NASDAQ stocks over 50 DMA. And you can see here that, we had the recent rundown. This low here corresponded with the low in our NAMO oscillator. That was our oversold reading, where we said, the benefit reward of staying short is highly diminished, more of a better chance to get long. That worked. But what I wanted to show you on the breadth, that it's still very, very poor. We had a little reflex bounce, went from 18% over the 50 to, let's just call it 30%, and now we're back down to 24.5, and that, that is very, very poor when the average stock is 75% of them are below the 50. That's not healthy. And we've seen it time and time and time again that those top 7, the FATMAAN names, Tesla, have been holding up the NASDAQ. And I'm not going to show it here, but the percent New York above the 50 is a little better. It's around 45%. So still, even there, the average stock is below the 50. So that's something we got to keep a real close eye on, especially if if you, like everybody else, has funneled in to those big names. Just understand that is the market. We know that. And understand that under the surface, there's been a lot of damage. So let's go on to the SPY 2-hour. We had a good day on Friday. We were up almost 1%. We had this big 2-hour flag consolidation. And then Friday, we had a strong finish. Remember, Fridays are a good time to look at risk sentiment. And we had a strong day and a strong final bar. So that boded well for risk sentiment heading into the weekend. So now we're emerging from this flag, and I think today you can use this as your pivot point here. We can get a little bit more granularity on the 30-minute chart. I think you can stay long against 470. That more or less defined this consolidation range. You don't want to go back into this range. That would call that breakout into question. One thing I do like what I see here in terms of the indicators. Why? Because we had a momentum reset here on PPO while price consolidated, and now we've got a bull cross near the 0 line, and that's a very bullish sign. And you can see here on RSI, we never really lost the 50, the halfway mark. So that stayed in its bullish regime as well. So bullish on SPY. I think you stay long against 470. Qs up 1%. We had the big gap up the other day. We had follow through. we had a pullback into 394 and then a nice move on Friday up to this 398 level. It's pretty clear to me 398 is your pivot. You can stay long against that with your first target being that all-important 401. I think that's a really, really, really important level. Why? Couple of touches, reject, breakout, fail, retest, multiple rejections, came back up again, rejection. So your real point of focus, aside from your entry or whenever you get in, is going to be this 401, because you've got a big line of resistance there. So if you get a little gap move this morning, we're up about 0.3%. They come back real quick and give you a tag of 398. I think you hit it there with a stop just below and look for 401. We'll show it here on the 30-minute chart to give you a little better focus. Here's your pivot point at 398. If price were to come back to 396, I think that's a potential entry. A move right above 398 is a potential entry. And then as you move towards 401, if you get a big breakout there at 401, I think that's the place where one, you scrape off your win. If you got in at 398, you'll be $3 to the good. You reset up above 401 because that's going to be a big line of support if and when we break out from there. And then you can stay long against that 401 level. Now, this morning, since we're so far in front of the open, if for some reason you can't get in at a reasonable place below 401, you just wait. You just wait for 401 to be taken out. Or if you get the sense that opening run is hitting a wall and it can't get through, that would be a very objective place to take a short with your stop just above and play for a back test of 398. So those are some things to think about this morning as we're kind of evaluating where the open is going to be. IWM has not had a lot of traction. We had the big move down. We found a base here around 213. We got the lift, and then we got the rejection right at the entry into the old gap. We came back. We filled this gap. And now overhead, we've got the gap entry. And don't forget, this gold moving average is the 50 on the daily chart. So in essence, we've got two layers of important resistance right here at 226, maybe 226.25, right in that area. If you were to get long down here and you caught that run and price gave you a run up towards 226 at that gap, that's where I would take it off and book that win from lower levels, and then have your recapture of the 50 EMA and gap entry as your new pivot point. And you can see it right up here. Actually, I've got it marked. I haven't adjusted that yet. It's really more towards here. Let me do that. I'm sorry, guys. Keep missing that. So yeah, here I move the gap down to a more representative level. That's where it really is, right? 226.25, and it's not shown on this chart, but your 50 comes in at the same level. If you were to get long down here against 219, and there's some epic run, and you get a move up to 226, take it off there, and then recalibrate if there's a gap entry and a recapture of the 50 EMA, and then you can go for the $5 gap fill higher, and then that way you'll be able to book some wins ahead of Jerome Powell, and then you can decide whether you want to stay long into that event, depending on what price does here at the bottom of the gap. Now, new visitors to the channel, thank you so much for spending some time with me this morning. I do my best to set your day up for some good trading with very objective levels that you can focus on, and then work on your execution around those levels. I think with time, I think you will build a lot of confidence in the levels that I give you. And once you get to that point, it's all about execution and honing your skills. If you like that idea, please hit the subscribe button and the alarm bell. A like is always nice. Pass my link along to others in your trading circle that they may find the work helpful. I would really appreciate that. And if you want to jump over in the show notes, there's a link to the blog site where you can register for all my content, morning, noon, and night, whether it's an intraday trade update or an article that I found. You'll get all that in your mailbox. You won't have to hunt for it. You won't have to miss a thing. So that would be great. And you'll also get an invite to our trading room, and we'd love to have you there. Longtime listeners, thank you so much for the support. I really appreciate you being here with me. So let's tackle FATMAAN. Friday, Facebook really didn't do anything. It's had a big, strong run off the floor. Came up here to the gap and got rejected, and now has moved back down a little bit. I think you can get long here about 330, 331 and a half, right in this area, and then look for a A, B, C type move out of this little corrective phase if the market decides to get bullish. If not, you may just see a lot of chop in this area until the Fed risk clears. I wouldn't want to see price drop below this 326 level. That was the level that we said was important to hold, and it's done that so far. We had, let's see, 1, 2, 4 hourly touches of 326 that have held. So if you get a little back touch at 326, I think you can buy it there and then set your stop just below. Apple's been an incredible story. I mean, we've documented, and I hope you've been trading it, all these series of strong moves of gap up, flag, move higher, flag, another breakout, and just really strong day on Friday heading into the weekend. We had the breakout to all-time highs right here above 176, and then we actually had the strongest candle of the day into the close. And remember, it was just last week that we had our whale by these 200 strike calls out in March in giant numbers, and we've already made a lot of progress. I mean, we're already up to 180. Another bullish factor is we've got a high level bull cross forming. So that's always positive when you get a little breather in momentum, comes down in a very shallow way and starts to put in a bull cross at a high level. That's a bullish move. And you can see we're overbought on the 60-minute chart, and that's not a reason to sell. It's a reason to say, wow, this thing is really strong. What you want to be worried about or recognize is if this thing falls out of overbought conditions back below 70 or below this low here at 65, then you need to be concerned that this thing is going to move down towards 50. And you would also see momentum, maybe come up here and then roll down. Not expecting that. I think you stay bullish until price proves otherwise. But Apple has been incredible. Less incredible has been Tesla. Had reports last week that Elon is still selling. Obviously, I don't know what his game plan is, what his motivations are, whether it's, hey, I know this thing's overvalued, so I'm going to start moving to cash, or if he's got other big plans. No idea. Maybe he wants to, I don't even want to speculate. So anyways, but when he sells billions in stock, it's an overhang. It's a supply, it's a supply and demand issue. And if he hits every pop with, $1 billion worth of selling, it's going to have a hard time, reaccelerating. So right now, it's just kind of in that mode. We came down. We tested this prior low. We got a bounce. Now we've come back. While we didn't go all the way down to 970, we did, go down right into that band of support at 980. And I think that's what you key off of on the downside for a mega break. This morning, I think you use that 1010 that we've used over the last several days. I think that's your pivot point. If you lose 1010 and you see red bars, I think you're going to come back yet again to test this 980, 970 band of support. And if you were to break 970, then you're down here in the 950s testing this gap. And if that cracks, obviously down to 910. If you'll recall, last week we put together an ABC corrective move, which was A, kickback rally, leg B, leg C, same distance as leg A, and that puts us down at 880. So just from a technical standpoint, there's certainly the potential of a lot more downside in Tesla. Microsoft, great day on Friday. We had a gap up, and here's the that gap. We had talked about 336. That was your first buy. We talked about how important 338 was. Why? For the same reasons we talked about on a couple of the other charts. We had a big line of resistance here where price had tried to get through quite a number of times, couldn't do it. It was support back here. So whenever you see that, lots and lots of overhead rejections, you know that line becomes more important. Was able to power through. Oftentimes what you'll also see with an important line on the chart, look at all the back tests. We broke out, we came right back, we came back again. Those were 2 and 3 chances that you had, if you were focused on it and everything, to buy into Microsoft. If you if you miss this one and you miss the original breakout, you had 2 more chances to buy it on those back touches. So that, remember what I always say, don't beat yourself up for, missing the move. You can resolve yourself to say, damn it, I missed the breakout. I'd been wanting to do that, but I forgot my alarm. If I get a back touch of 338, it's the same thing. I get to buy right at that level, and then you had 2 chances with a stop just below. Then you were in for the ride up towards 342. So now today and going forward, 342 is your pivot with a look above to 344. That's going to be your first resistance, and then you got all-time highs up here towards 348. And those locations could be locations where you roll up either your stops or your strikes or both for this move. And I think what you should be thinking about right now as we head towards Powell is, how are you going to play it? Are you going to be, balls deep long? Are you going to be light? Are you going to have some shorts in place? Are you going to be flat? How are you going to, if you've got a long portfolio book that you've been in for 2 years, are you going to try and hedge it? And what is your hedging vehicle going to be? If you're loaded in tech, are you going to buy some QQQ puts for Friday in case there's some massive move that you could monetize? Are you going to, there's a million ways to do it. All I'm saying is, if you had in your mind, hey, I want to be really light heading into Powell, and you get a buy alarm here at 342, you're either buying it with the idea of, I'm going to be out ahead of Powell, ultra short-term trade, or you're saying, I'm going to buy duration. I'm going to go out, into January, if you will. So kind of have your strategy mapped together, because we've got that fly in the ointment there with the FOMC. And so kind of put together your game plan, not only taking into consideration what you've already got and own, but do you still want to own that stuff into Powell, is what I'm saying. And if you don't, if you plan on lightening up, then you get this alarm that would tend to make me think that, you're just buying some calls for Friday and you're going to be out before Powell, versus, this is my big chance to buy Microsoft for 2022. So, okay. Amazon. Big move down, kickback rally, back down again to fill this gap, and sitting on, we tested 34.20 5 times, 6 times. If you wanted to be long Amazon, that would have been a nice place to do it. If you get a back touch today, if there's some morning weakness and you came into 34.20 and the bears can't break it, I think you get long right there. And then you look for 34.60 and then 34.95, 3,500, and then go right on up the tree. We've got multiple places above where there are clear lines of resistance. Same idea with Google. It didn't really do much on Friday. I think you can be long against this 29.45, 29.50 area, and then look for a move to 29.80, and then that'll be a big resistance point where if you got that breakout, you're probably going right up to 30.10 which was the prior high. If you roll over, I think your support's at 29.20, and then you've got that prior gap that has not gotten filled yet. Netflix remains soggy. We had pretty much the same kind of analysis on Netflix that we had on Tesla. Impulsive move down. Well, first, impulsive move down, bear flag break, leg 2, kickback rally, back to the old gap, and move down. So we could still be in for a B, C move that will bring us way back down into the 575 type range. I think today you can use 610 as your pivot. If we can stay above that, I think you can get a run into 622.50. If you fall below, I think you come right back down here towards 596, where you can test the prior low. And let's just, while we're here, let's look at the posture of momentum and RSI. Notice we got the momentum upswing near the 0 line where it rolled over. That's bearish. That's this move here. But look at where PPO is now. We had a low right here where PPO was here at -2. Now we're at -0.5. Let's play out this scenario where price comes down and tests the prior low at 596, but then PPO flattens out and starts to move higher. That would show you a double bottom low with big bullish divergence, right? You would have this low corresponding here. You would have this low at a much higher level, and then you get that bull cross on a double bottom with bullish divergence. And in my experience, that's money. Now, you got to wait for that to play out. And the way for that to play out would be for 610 to break, but then 596 hold. And then you can get long at that level with a stop just below, and then wait for your bull cross and reacceleration. So that is a potential type scenario that may unfold in the days ahead. Semiconductors. We had the big gap up last week. We came back, got into the gap, but you can see that this 304 held your biggest line of volume over price support right there. Here this morning, we're sitting at around 307 and change. I think you can stay long against that level. Look for 310 above, then 312, then 314. So like in $2 increments, you can look for overhead resistance. On the downside, if you were to lose this 304, then you come down, fill the gap to 300, and potentially test this 299. And if that were to break, you'd be back testing this prior low. Don't know if you noticed it or not, but on Friday, had a big breakout in Ford. We had flagged this item, this ticker, a while back in here. It had been consolidating, and we got a big bar on Friday with an impulsive move out of the range. Now I think you can stay long against 20.5, which is the top of the trading range. So if we were to look at it technically, fast move up, bull flag, breakout, I think this one's going higher. And I think when I did the write-up last time, I showed you that it was, we're at 20-year highs right here, and 20-year highs don't happen all the time. So we are at a big breakout level, and now we're running with, anybody that bought over the last 20 years is profitable. So I think, and there was a big insider buy. I think someone posted that the Ford CEO bought a couple million shares. So they only buy for one reason, right? They think it's going higher. There's a lot of reasons to sell. You're buying a house, you're putting your kids through college, whatever. You think the stock's going down. Lots of reasons to sell, but only one reason insiders buy, and that's because they think it's going higher. So here's your breakout. Stay long against 2050. I think this bodes really well, and you've got this high-level bull cross starting to form with the RSI in its bullish regime. So those are positive factors. Quick look at ARK. Breakdown, backtest, bear flag, breakdown, backtest, bear flag, rejection. Came down on Friday to fill this gap. I think ARK and all its buddies are going lower. I think, just beat the horse to death. Why not, right? I think the Ponzi's over. Whether that's, Peloton or pick any name, pick any bubble name. I think it's over. And I think what you're seeing is a rotation out of those bubble names into the Apples, into the Microsoft. We want to stay long, but we're going with quality. We're going with demonstrated earnings power. We're going with pricing power with an inflationary environment. I think the Ponzi bubble trade is moving to the downside, and I would say stay short until price proves otherwise. Genomics had a green week, but technically speaking, still set up to go lower. Here's the flagship fund, ARKK. Kickback rally, then lost the prior low, came down to fill this gap. I think it's heading lower. And if you see a move below 92, that's going to usher in the next big wave of selling as we break the prior low. Here's ARKW, same idea. A series of breakdowns, bear flags, and continuation. We had a low test last week here at 122.50. We got a kickback rally. We filled this gap, and now we're coming back in to 122.50. You can set an alarm there. If you want to be a little bit more conservative, you can mark it at this low at, say, 120. You get a break below that, and I think that's going much lower as well. So I think what's nice about the ARK complex from a shorting perspective is the option chain is liquid. You can get good fills, and also by its very nature, it has a tight basket of the things that aren't doing well now. So it's not like you've got, good ones and bad ones in there. They're kind of all going down together, whether they're, a high valuation fintech name, or if they're Tesla, or if they're, Web 3.0 names. They're all aggregated into these ETFs that short the things that aren't doing well. So in this case, I really think it's the way to go if you want to have a counterbalance short against your long book. I think getting into an ARK name or names. If you want to be short, either as a hedge or an outright bet on your long, either a hedge for your long book or an outright directional short, I think ARK is the way to go for the reasons that I just stated. So, all right, guys, start of a new week. We got Powell right in the middle. Keep your thinking caps on. Keep your wits about you. Take objective trades. Honor your stops. So, this has been Chris Buss with Trader's Profit Compass. Talk to you next time. Have a good day of trading.